First of all, I'm really excited to be here. I love hanging out with entrepreneurs. It's one of my favorite things to do, besides hanging out with my family. But it was a great pleasure to walk around and meet some of the entrepreneurs and hear some of the ideas and hear some of their pitches. And I always find it fascinating how just people come up with ideas and why things are important to them. So tonight I'll tell a little bit about the story of OpenTable, a little bit about myself. I'm going to start off with my sort of viewpoint of the world, so how I see things from entrepreneurship and my lens and whatnot and what I look through. It's maybe not traditional to many people, but it's served me well personally, and I think that's an important thing about entrepreneurship, is the ability to be yourself and do what works for you. So I'll talk a little bit about my perception on it, a little bit about a project I'm working on now, and then obviously leave some time for some questions in case there's any more curiosity. And if you have any questions along the way, I'd be happy to try and address those too. But so I just kind of put my four things as to, this is my view of the world, how I see things, but build a business in which time is your friend. So there's been, all sorts of quotes and people talking about it. A journey of 1,000 miles begins with a single step. So Confucius, or the most powerful force in the universe is compounded interest. That's Einstein. So all types of. So how do you build a business where every day, or how do I build a business to where every day, if we take a couple steps, we will move up this path. And that, to me, is how we think about funding. And overfunding or underfunding a business, overhiring or underhiring a business. I believe there's a certain friction that businesses can grow at, and every business is different. And if you overhire, underhire, overinvest, or underinvest relative to that sort of organic growth rate or accelerated organic growth rate, that you get in trouble. So how do you build a business that through time is your friend? Number two, I am wrong a lot. And so for me, it's about surrounding me with people who will challenge me and let's figure out how to get it right rather than being right. So a lot of this comes to a culture of making mistakes, a culture of learning, a culture of trying things that haven't been done before, a culture of challenging, well, that's the way we used to do it. So how do you continue to make a business that is sort of solution focused, if you will. Three, which I think is always been important, but today in the world of social media, being authentic. So, I talk to a lot of entrepreneurs when they go out to raise capital about should they change their story because a particular investor wants to hear it a certain way, or they're used to seeing things a certain way. And if it's against their grain of who they are, I coach them no. I think, you have the wrong investor if they see the world in a very different way than you, and you shouldn't compromise on what you're trying to do. So embracing who you are, being the person that you are. I think social media is this digital fingerprint that's out there, so people know and people can smell when you're not authentic. And then finally, which I've heard a lot tonight, is how do you improve the human experience? So I get approached by entrepreneurs from time to time, and their ideas are purely about making money. There's nothing wrong with making money, certainly, but I'm less interested in working with those types of entrepreneurs than people who are actually, giving back to society in some way, triple bottom line, doing well by doing good, moving from less bad to good. So to me, Prius, less bad, still consumes oil, still, drives on our roads and does a lot, but, how do we move to being a regenerative businesses that actually contribute to the human experience in ways? How do food companies make food that makes us healthy? How do shoe companies make shoes that make us healthy? How do companies, and you're starting to see, I think, even the big guys, the Walmarts, the Nikes of the world, are starting to understand this and change internally how they think about business. So some pretty interesting stuff. But anyway, so those are kind of how I see the world. So my background, I grew up in the San Francisco Bay Area. I was in the military for a while. I got my undergrad degree in environmental economics from Cal Poly in San Luis Obispo. Moved to Chicago actually in 2002. I don't know why I was thinking 2003 earlier. Did get my MBA from Kellogg. When I was in high school, I was riding my bike to school, and I saw a bumper sticker on the back of a truck that said "Question Authority," and so I've always kind of taken that to heart. I don't know why, it sticks out in my head. So I've always sort of questioned the way things are done. Well, why? Why is it that way? Why is it that way? So I've been fortunate enough to be part of a lot of early stage companies. Some have failed miserably, and some have done very well. Couple corrections on the OpenTable, and I'll talk about that. So we're at about 20,000 restaurants now. We're in 18 countries, $2.5 billion market cap today. So it's you know, and I've got sort of my next BHAG, my Jim Collins expression, big, hairy, audacious goal, and that's around. So I think with OpenTable, we change the way the small businesses interact with the internet, and they use it from a marketing standpoint. And I think you're seeing companies like Groupon and Grubhub and you know, dozens of other companies start to bring this wave of small businesses onto the internet, which is fascinating to see. So I think I'm going for the next wave of stuff of how do you bring individuals and people on in a way that's very much about local and whatnot. So. And then the most important bullet point is you know, I spend a lot of time with my wife and my two amazing girls. So that's where I have my most fun. So the beginning, wow, that was a long time ago. So it really comes down to being this unique perspective that I had that few others had on the world. So sort of the initial spark was my in-laws coming into town one Friday, Saturday, Sunday night, and my wife needing to make restaurant reservations for them. My father-in-law happens to be in the restaurant industry, so there's a lot of pressure there. He's coming out to San Francisco to meet us or visit us. And so my wife spent about 3.5 hours one Saturday morning, which didn't used to be the best time to make restaurant reservations, using City Search. If you remember Sidewalk at the time, which was the Microsoft competitor to City Search, which is long gone, and then Zagat, the maroon guide that's used to be only in paper, and now they've finally gotten online. So, you know, watching her struggle to make reservations one Saturday morning, I had, you know, all these friends who were doing some neat things in the internet. It was this thing that was catching on in the Bay Area. You know, a friend of mine started a company called Evite, which is this online invitation system where you know, you can invite people to parties. Another friend of mine started a company called North Point Communications, which is one of the first broadband sort of final mile companies out there. I worked in the semiconductor industry, so Moore's law of, you know, doubling in computing capacity or halving in price every 18 months. I paid my way through undergrad, partially from time in the military and waiting tables and bartending. So, and then I lived in San Francisco, I was working in Fremont, and I was getting first time I tried my master's in Santa Clara. So I was circling the Bay a couple times a week in Bay Area traffic. So all these sort of things where I could see the restaurant industry, I knew it well. I had some friends who were doing stuff on the internet, so I understood sort of the power of that and where it was going, or I could get into that a little bit. I could see this last mile problem being solved. I could see this market industry that had all these challenges. So I was in this unique position to be able to see all these vectors that not many other people could see the same way I could. You know, Michael Jordan, I guess dated, but he could see a path to the basket that no one else could see. And so I think, and that's the thing that excites me the most about entrepreneurs is they've got this particular vision or vector of where they're coming from that not many other people can see, and I find that fascinating. So a lot of people ask us about the business model. We replaced the paper-based system that they used to use before with what we call the electronic reservation book, or the ERB. We charge actually a installation, configuration, and setup fee, training, that kind of stuff. And so, you know, if you remember, so back in the day, restaurants, because they had these paper-based systems there, a lot of them wouldn't have power at the host stand, wouldn't have certainly any sort of networking, you know, or any sort of internet access. And so most of them hate technology. And so it was this really fragmented industry that we had to go into. So we had to set up these systems. We had to, a lot of times the routers would be, under the host stand where everyone would throw their bags and things would get unplugged, and you'd be talking to the host or hostess and you'd be like, yeah, the router, and they're like, what's a router? And so all these things, to sort of plug it back in. So we charge an upfront fee. Then we charge a monthly service fee. With the monthly service fee, so it's a software as a service, but we provide at least one piece of hardware as well. So the monthly service fee takes care of product updates, any sort of ongoing training, security, because these are open nodes to the internet. We back up data every night in case someone accidentally loads quick in and deletes something on their system. Then we charge a per cover fee. So party of 4 is $4, party of 3 is $3. So every reservation that comes to the internet. And so those two really help us charge appropriately for a restaurant. Larger restaurants are going to have 2 or 3 systems. They're going to do a lot more covers per month online, or a lot more reservations per month online. So a larger restaurant that can afford it will pay a lot more than a smaller restaurant, which can't, which is maybe doing 40 seats a night or something like that. And so it became this model, looking back on it, that worked really well. We could scale it up and down very easily depending on the size of the customer or the restaurant. So it actually, in hindsight, looked like a very good, has worked out very well. And I have a slide I could talk to you about all the fundraising that we did, but I didn't include it in this, but I could go to it. But the thing that the investors hated early on about OpenTable was that we had to take this box and get it installed at a restaurant. You can imagine sort of the friction that would cause, and it did. We had a sales team who had to be able to sell to a CEO. All these restaurateurs are CEOs. They're running their own business. They're very busy. Most of them are owner-operators, so you can get their attention from about 10 to 11:30 and 2 to 4:30. So you got 4 hours a day. You can sell to them. You've got a salesperson who needs to be able to sell to a restaurateur who's only doing it 4 hours a day, who hates technology, and by the way, the server or the busser just cut their finger off, so they got to rush to the hospital with this person. So it was this huge barrier to entry, and hence the company through its life has raised about $102 million, and a lot of that was purely about getting these boxes in. So one of the things I work with entrepreneurs a lot is unit economics. So what is the cost of sale and what's the arbitrage opportunity for that, or lifetime value of that particular customer? So our original cost of sale was about $4,700 for one of these systems. And so when you're charging $200 or $300 a month and your internet reservation business is $50 or $100 a month, it takes a lot of months to recoup that system. So early on, it was a very expensive business for us to build, a very expensive infrastructure business. So the market, investors hated that. Now, that's why we're trading at 180 times PE ratio. So that's why it's overvalued right now in my mind, because it has this defensible system. And a lot of people told us, how do you make them go get their own computers? Well, they wouldn't go get their own computers. They wouldn't go get their own internet. So we had to do that. We had a mantra internally that if a restaurant could sign their name while falling over, we'd get the system in. We actually had one restaurant in San Francisco that was an influencer. It was called MC Squared. And they had this, host stand that was this piece of steel that came up out of this polished concrete floor and a platform right there, and so we had to get power there, and they're not going to, have extension cords coming down from the ceiling or anything. So we spent, they signed the contract and paid full price for the system, but we spent $4,000 jackhammering up the floor, putting in conduit, putting down new concrete, and polishing the floor again because we needed them as an influencer. So, but anyway, so that was our biggest challenge early on, and that's what the market loves about us now, frankly. So other revenue models in there. So we do a lot of yield management. If you've made a reservation, you'll see 1,000-point opportunities to get extra points or rewards for dining at restaurants at maybe unopportune times or not in their peak times. And so the restaurant industry, and I'll get to this in a little bit, is a very high fixed cost, low variable cost business. So you've got servers there, you've got tables there, you're paying for the real estate, the ovens are on. The only variable cost you have is the food. So and that's about 30 to 40% of, depending on what type of restaurant you have. So incremental diners are very important and drop a lot of money to the profit of a restaurant. So, and that's a lot about our business model. So I'll talk about that in a bit. But so yield management, and then for groups like Let Us Entertain You or Morton's or restaurants that have multiple chains or multiple locations across the country, we have some other services like central guest reservation. So an example of a restaurant group in Chicago called Let Us Entertain You that has about 40 restaurants in Chicago that take reservations. They want to be able to answer a phone, and if they can't get you into one of their restaurants, they want to be able to take a reservation for you right there into another one of their restaurants. So you can get your need met and they cannot lose you as a customer. So that type of thing. And then central guest database is something like Morton's, where you've just dined in the Morton's in DC and the next day you're in San Francisco. They want to be able to recognize you as a VIP in both those. And so there's a lot of complexity to having a system that works really fast at the host stand, but then also can share that type of data across systems. And then our Groupon knockoff, our other product, Spotlight, which is obviously to the craziness around the Groupon and whatnot. It's been something we've had to approach very delicately because we don't want to cheapen the restaurant experience. And a lot of the upper end restaurants, it's a sign of weakness if you're giving discounts, and so they'd rather give you a dessert or something. They'd rather throw in something rather than discount off the price. And so it's been very profitable for the company, but they've got to be very careful that they don't, I think, go too far. But actually, I didn't mention that. So I haven't been with the company for about 4.5 years or something like that. So, but I'm a big cheerleader and whatnot for it. But this is one of my favorite slides, but I think it illustrates, again, the power of a market maker. Down on the bottom right, this is from our Series C presentation, so back in 1999. So I'm about to wow you with some animation on PowerPoint, so hold on. So this was me getting fancy to our prospective investors. So you have these 30 million buyers, diners who dine in restaurants that are reservation-centric restaurants. Don't ask me where we came up with that number from, I have no idea. And so this is what they look like, right? So, woo! And then you've got these 100,000 sellers, these restaurants that are out there. And so the number actually is probably about 60,000, but 100,000 is a big number, so I put that up there. So these are reservation-centric restaurants, not your Chili's, your Chevy's, or your Macaroni Grills, those types of things, or your Olive Gardens, but restaurants that, mostly mom and pop. And some interesting thing with that, Let Us Entertain You might be a large, they have 60 restaurants or something in total. But the interesting thing about going after the small guys is you never get a big fish when you do it, but we had all the market power there. So none of them were big enough to say, okay, I will take your product if you customize it this way. And you're like, well, we can't do a custom product for every restaurant, so we can't get to you now. We'll put it on our list. We'll get to it when we can. We'll come back to you in 6 months, and hopefully, we've got something. And so, with not having to sell to these big guys, and that's why if you look at a lot of the point of sale companies, the companies who sell the terminals where people put in the orders, at the restaurant, a lot of those guys don't trade at very high margins or relative to their revenue because they have such large engineering departments because they have to support all these custom versions or all these specific products. Whereas every time you have a new product, you have to have different customer service people, you have different installation people, so there's a lot of this sort of overhead that goes into that. So for about the first 8 years of the company, we had 10 engineers, period. Now there's like 150, but because we've gone into a lot of other things. But so we were able to actually go into a restaurant, and if they didn't like it, great, sorry to hear that. We'll put that into consideration. We'll be back in a few months, and maybe the product will have enough, product for you then, and/or there's enough velocity going through the network that it'll be worth it for you. So, and then what OpenTable's job was to bring these two sort of markets together. And watch this part. This is really fancy. So, so being this market maker there and protecting that OpenTable brand so that we weren't this invisible technology in the back end that could be, City Search or Metromix or whoever else could invent their own sort of system to compete against this. We actually, so one of our investors was Zagat, the Maroon Dining Guide. And they used to be a very powerful brand in a lot of markets, and they're still doing okay in New York. But they actually invested in us in our Series C, and then 3 weeks later invested in our biggest competitor the same amount, because they wanted us both to win, so that we could fragment the market, but then they could be the single aggregator at sort of this central level. And so, you know, wasn't a happy day that day when we heard about it. But we knew that in order to enjoy this sort of premium that we were getting, that we had to be this market maker, the single market maker. So we've been fortunate enough to have, we've probably got about a 97% share in the United States. There's a couple competitors that we have. So this strategy has done us well. And now our cost of sale, where it used to be about $4,700, is now about $350 or something like that. And that's like 90% of its commission that we pay the salesperson. So, you know, the other costs have almost disappeared because we're starting to get so much velocity. And the interesting thing is with this, you start to create this increasing returns model, this network effect model. So San Francisco, the market we've been in the most, is still to this day has our #1 salesperson, because it's tipped in that market so that now no restaurant almost will open without OpenTable, and all the restaurants that don't have OpenTable are now rushing to get as part of this sort of. I work with a lot of companies that sell to small businesses and are bringing small businesses on the internet. And 18 months ago, you couldn't sell by phone to small businesses, and now almost the small businesses are calling you. You don't even have to call them anymore, or call them now. So it's sort of shifted. This craze has shifted, but it's really worked in our sort of favor at this point. So this to me is the biggest reason why OpenTable succeeded. And this is right off the I think it's still a URL, but you can find it on the OpenTable.com website. So at the bottom there. So I mentioned earlier, high fixed cost, low variable cost business. So if you look at an incremental diner, where 40% of their cost is food, so if they spend $1, 40 cents is for food, 60 cents is profit. Incremental diner, right? So if you do 12 in a month, $50 check average per head, that's $30. 30 times 12 is $360 in incremental revenue that they make off those 12 diners. So why this is so powerful, and there's some interesting things about the dot-com implosion, or whatever you want to call it, in 2000, and the deep recession that we had in 2008 that really worked in our favor, frankly. So we bring more than 300 covers. This is covers, not incremental. We've done a lot of research to try and figure out what those covers, how many of those were incremental, and we think about 25%. So that's 75 incremental covers when you need 12 for it to be a positive ROI. So if you're having a tough time, you're going to cut everything from your expending that you cannot prove has a return on investment, and this is going to be the #1 thing that you keep. And this is what's helped us, and that's network effect, that's increasing returns business models. That's what the internet is beautiful about, if you can hit it well. And we were lucky enough and fortunate enough. We weren't this smart years ago. We were doing this, but looking back on it, this is my perception as to why it worked for us. So brief stats. So it was founded in 1998. You know, we thought it originally, like I said, was about my wife trying to make restaurant reservations, and I thought I would just take the internet and plug it into the back of all these systems out there. After 4 days of looking into it, or whatever it was, found out there were no systems out there. There was one guy who had about 100 restaurants, and he was building the product out of his garage, but he had 14 or 15 different versions in these 100 restaurants, and he was getting buried with customer service. So we were beneficiary of the first dot-com crash, and essentially, so we raised first round of 750. This was in '99. We closed that round. So we were trying to raise 500K. We got 1.2 million committed. We closed that round at 750K. We pushed everyone, we pro rata everyone down to that. Increased the valuation by 4 times, meaning that the company was worth 4 times more than it was the day before, and then raised a round of $2 million 3 weeks later. So it's a very different time in the market, or in the valley. Very interesting. Then in December timeframe of '99, We had 65 employees, and we'd raised $2.7 million at that time. And the mantra for internet companies was eyeballs at all cost. So it didn't matter about profit, didn't matter about anything, business model, nothing. Eyeballs at all costs. We had been charging people all along the way, but we certainly didn't have anywhere near enough revenue to support 65 people. So we were fortunate enough to, here I'll air a little dirty laundry here. So it was a Thursday afternoon, Thursday around 11 or so, 11:30, was meeting for lunch at a place in Palo Alto called Il Fornao, which back in the day was sort of this legendary VC place to meet with people. We had been courting a gentleman named Bill Gurley, actually you might call it stalking, a gentleman named Bill Gurley, who was one of the investors of 5 or 6 venture firms that we really thought would be a good partner for us. I'd send him an email every 3 or 4 days, probably. Felt like months in between them, but it was probably every 3 or 4 days. Every once in a while he'd send me back, 2-word reply or 3-word reply, and of course it'd be like a 2-page response from me back to him. And then, so he actually happened to go to 3 of our restaurants in 1 week that when he was talking to the host, or the hostess, whichever it was, they were very excited. And they actually, in 2 of them, they pulled him around and started showing him what it was. I mean, they didn't know who he was. You just asked him, you saw, oh, this OpenTable logo thing. So, he liked us. He had a friend, a gentleman named Adam Dell. You may know his brother. He's in the PC industry. His brother, Adam, Michael gave Adam $100 million, said go be a venture capitalist. And I like Adam a lot. I'm being a little facetious with it. But so met with Adam. It was Thursday at 11. Payroll was due tomorrow morning. Didn't have it. 65 employees. We meet. We're there for about 10 minutes. Great to know you. So he says, all right, I'm in. So we're, kind of pause at the table and, okay, what do you mean? All right, you're in. So he's like, I'm in. So and essentially what we had found out later is that Bill told him that he couldn't lead it, but if Adam led it, that Bill would follow, because Bill sat on too many boards at the time. So 10 minutes into lunch, Adam says he's in. We're shaking hands. That's great. Everything. Adam, we got one problem. We got payroll due tomorrow, and we don't have enough to cover it. And so Adam says, and so covered the concept of BATNA, right? Not a very good alternative to that negotiation. He actually said, well, $1 million due. I'm like, yeah, that'd do. That'd cover our payroll. So he's like, all right, give me your routing numbers. And so, of course, I'm on my Motorola flip phone. I don't even remember those things, but it was, calling, like this, calling our controller. And he's like, oh, here it is. So I give it to Adam. Adam calls his office in New York, wires us $1 million that afternoon. No signatures, no terms, no nothing. Just crazy. So good news for Adam is he invested $11 million ultimately in the business, and we returned like 120 to him back so far. So it's worked for him, but kind of crazy. So we raised that 11 million where I was going with this. Sorry, 10.5 million that round. 3 from Adam, 3 from Bill, $1.5 million from Zagat, $1.5 million from Zagat, or from American Express, and then $1.5 million from our past investors. Then the dot-com crash happened, and so here we are sitting on $10.5 million. Not a bad number, but when you're burning $700K a month or something like that, it's not a good number either. So a lot of we had about 8 or 9 other competitors at the time. They started hitting the wall. And what happened was that Bill Gurley from Benchmark Capital recognized this sort of 2-sided model. They had just invested $5 million in eBay, which returned them like $5 billion or something like that. So they got to see this 2-sided model. Bill suddenly got involved, and then we raised a $36.4 million round in October of 2000. And the idea there was, and this is using capital to be strategic. The idea there was to then we put it all over the press and everything. In October of 2000 was a very dicey time, and so our message was, don't get into a spending war with us. And so it essentially, none of our competition could get funded at that time, and they all start hitting the wall. So for us, the crash of 2000 was a dream. It just worked well for us. So Now we have about 20,000 restaurants in all 50 states, and it's about 18 countries now. We have over 400 employees. We've seeded 200 million diners online. We're number one in all of our markets. In every international market, we're number one. We've been, and then in 2008, again, because of the model I just showed you, about 12 incrementals and 300, so every time they cut, we weren't the ones that are getting cut, and actually the restaurants who were holdouts now actually started to come to us, and so it became easy for us. And then we got to go public on the NASDAQ in 2009. A lot of stories as to why then, and in the midst of the worst economic downturn, why would you go public? And there's a lot behind that. But if you look across the bottom, that was our logos. This is, early on was when I was in charge of marketing, and later on is when other people got to be in charge of marketing. So we originally thought we were Easy Eats, and then it was going to be, for about a week, it was going to be Easy Cuts and Easy Docks and Easy Putts, and we were going to go for after all these verticals, and then we realized how big the restaurant industry was and how challenging it was going to be. And so the brands migrated through time. And so, sorry, I've got a couple self-indulgent pictures here, but I think is a lot of fun if you ever get the chance. That's at the IPO, so I got to go to that. So the gentleman in the middle is, that's at the NASDAQ in Times Square. It was a pretty fun experience. The gentleman in the middle, Jeff Jordan, the current CEO of OpenTable. The guy on the right, I don't know, he's the president of NASDAQ or something like that, so I don't know. Probably should. He'd be a good guy to know. So one of the things that were kind of fun was that we were the third IPO in 2009. We were the first tech company really in 2009. And so people wanted a story. People wanted, the markets needed some confidence. And so we had both the New York Stock Exchange and NASDAQ competing for our business. And so we got paid a whole bunch of money by the NASDAQ to go public on their exchange. So it was nice. Usually you pay to go public. This time we got paid to go public, which was good. So it was really exciting, when you're walking around Times Square and they have billboards all over it that are talking about this little company you started at the end of your bed, and your boxer's typing away on a computer one day. It is pretty fascinating. The first time you could see Open, which is the ticker signal, go across the NASDAQ board, was pretty fun. So should I open up for questions now and then I'll jump into what I'm doing, or should I keep going? Okay, so if there's any questions, I'd be happy to have them, but I was going to transition over into sort of my next project.
Did you invest in any other verticals, or did you completely let that go to?
Completely let them go. Completely let them. And now there's actually some companies doing well in that space. So last year, OpenTable did 7% of the restaurant reservations nationally. So it's about focus. And there's a woman named Gilles Bicharat, who was our sort of first real VP of marketing. She had this expression about maniacal focus. And so if a restaurant wasn't a reservation-centric restaurant, we didn't talk to them. Twice we did these little maneuvers where we bought a company that was about queue management. So your cheesecake factories and those high volume at the door where you've got to manage a queue, completely failed in that. We were lucky able to sell the company at the same price that we bought it for, but we spent a year trying to figure out what to do with it. And then one of our customers asked us about room service ordering from television screens, and we're like, oh, that'd be cool, we could do that. And it was just completely distracting. So we haven't done it, but there's some companies now going after it. I think it's a very different business model. I don't think you need to be client server. We are client server. I still think that's a valuable thing given how fast you need host stands to be and some other concerns. Whereas a lot of those B2Bs, that type of stuff could be purely web-based. So.
How do you compete against a local high-touch competitor?
Volume. I mean, first of all, our cost of creating a system is far less than it is for someone else at this point. Because we've got, remember, 10 engineers that we're leveraging across thousands of installations for one. And so, our product is more mature. We start to get people so when a restaurant, as an example, opens up in San Francisco, we bring in that first 30 days, generally between 600 and 800 diners to it. And so that pays for the system for close to 2 years for it. And so, you know, like I said, it was a very expensive business to build. It cost us $4,700 at first to get a, you know, restaurant up and going. And a lot of, unless you've got a lot of capital, and for, I mean, we had like a, you know, so there was a bunch that started in 98, 99, but no one really started again until 2007. And by then we had, you know, 8 or 9 years worth of runway to get out there, get the product better. So it's just inertia that, you know, mass creates gravity at that point. So, any other questions?
How did you make it through the Army if your life motto is question
I got in a lot of trouble in the military. No, I actually got to spend, so not to dwell on this point too much, but I was a replacement for a really hardcore unit, and so it was a bunch of AWOLs and a bunch of injury, people dropped out, and I was this first replacement wave into there, and so I got to do schools all the time. Went to Ranger School, Sniper School, PLD, so I did all these, so I was in schools most of the time, so I didn't have to like deal with the everyday Army stuff, so for me it was actually a lot of fun, so I spent a lot of taxpayer money though. Yeah, so I don't know, does that answer it? Yeah. Any other questions before I jump into? Okay, so same chart, you might remember this from early on. So sort of dealt another hand, have this another set of vectors that I'm looking at. So and really the catalyst was the birth of my oldest daughter. So she's 6.5 now. And so, you know, as she was born, I've always kind of had a green tint to myself. You know, when I was in college, we used to capture all the cold water in the shower and use that to flush the toilet, and you know, some things like that. So you know, my dad was a big aluminum can recycler when I was growing up. So anyway, but when the birth of my oldest daughter happened, I started to wonder what her future was going to be like, and so I started doing a lot of reading. You know, Amory Lovins and Paul Hawken, and a lot of the folks who sort of have different perspectives. Singularity, that guy was actually just on Colbert last night, which is interesting. So I was doing a lot of these types of reading, and was concerned about, frankly, what I saw out there. And so, you know, I started thinking about, you know, what is important. There's this thing called the internet that's sort of moving in its next phase, in my opinion. You know, things with like, you know, Foursquare and Twitter and Facebook and, you know, all these things. You know, there was certainly this awareness. I'm a, you know, believer in climate change, frankly, and I think it's, you know, a pretty big deal. I feel like we've lost a lot of the connectivity that we have locally, and so there was this kind of all these things that I was looking at, and I was, you know, for the last several years I've been toying around with different business models. I've had movie nights where I've brought in a bunch of people to watch different movies and talked about, you know, what was the language that people used after? Did they agree with it? Did they not agree with it? Most of them were documentaries. You know, spent a lot of time questioning friends of mine, did a lot of writing, you know, and so I've been doing a lot of advising to companies over the last few years. So really sort of came to this mindset that, you know, I'm remodeling our house right now. We're going to make it zero net energy, so it consumes as much energy as it produces. You know, we've spent a lot of time trying to get our energy use down to next to nothing. Lighting, you know, we've sold a car. I have a big Dutch bike that I bring my girls around Chicago in, you know, to get them to school and stuff. You know, we've looked at lifestyle design. How do we live near where we work, near where we go to school, near where we shop, near where we have restaurants? So we've designed a lot of these complications out of our life, or, you know, engineer a lot of the time sucks out of life. And so it came to this realization that the greenest I could be, or the most environmentally friendly that I could be, couldn't ever be as green as a group could be from that standpoint. And so an example is, if I wanted to go out and buy a shovel, the greenest shovel I could buy would be less green than borrowing my neighbor's, who's probably sitting there not being used right now in the garage, right? So how do we look at, and so I really started to look at waste. And so, you know, empty chairs that are sitting here, in my mind, waste. Someone could be sitting in those chairs, right? and that you start to multiply that across everything we have in society. So essentially similar to like Zipcar or Netflix or whatever, but for everything else, and building community at the same time. So how do we do that? So came up with this concept, OSOE, and it's only because it's a short URL. That's why I came up with it. But and so it's really about bringing neighbors together, and I think there's a whole level of local commerce that will come out of this, and so this is sort of my BHAG. And I think it does three things. It builds bonds locally, it saves money, and I think we can increase the quality of life. I think there's going to be challenges in increasing costs of food and energy and that kind of stuff, which if we can group more locally, I think we can solve a lot of these issues. So there's obviously a lot of community impacts to that, reduce crime and graffiti, and I've been studying a lot of neighborhoods across the country and some of the things that they do, and there's some fascinating things going on at the neighborhood level that I feel like if we could, so one of the things that technology has benefited from over the last sort of 10 years has been open source. So it's not been people each rebuilding the wheel. It's been someone building it and someone building on top of that and someone building on top of that. And so now you escalate things much faster. And so what we want to do is try and open source how many of these really successful, really tight neighborhoods are doing things and roll that out on sort of a national, enable it to be able to happen socially at any level. So it's really about building local social capital. We want to move to the point to where it's not about someone's bank account that makes them important in society or not, but it's about how they contribute to society. So we've got this concept around neighborhood that is our core piece. We're not trying to be Facebook, we're not trying to be Twitter, anything like that. And then we want to load sort of all these tools in around this eliminating waste, this increasing self-reliance, this increasing resilience, and moving to this sort of collaborative consumption or sharing economy, if you will. Where it is very a local economy. Municipalities are getting more to the point to where they're pushing responsibility down to citizens, and they aren't going to be able to do this. So citizens are going to need to find ways to be able to organize easily and effectively and sort of solve this. So we think we can build in these very local economies and local communities by doing what we're doing. So anyway. So I thought I'd finish off with sort of my 2 cents as to how we, it's sort of almost a mirror of the first slide, but how I think about sort of where entrepreneurs have a good chance of success in thinking about it. So first of all, this distributedness. So we've built for the last 50 years, we've built this very just-in-time, centralized economy, and I think you're going to start to see more decentralization happen in the economy. Ethical and authentic, talked a little bit about that. I think entrepreneurship is the safest career out there, frankly. So I think one of the things that we as America have done well, is continue to innovate and push the edge and sort of change the cultures across the world. Believe in something, so I think that that's again my 2 cents, and then give your gift. So I feel like and this is where I go back to entrepreneurs being themselves and being true to who they are, and not sort of being a flag in the wind that just sort of goes wherever investors or their friends or their parents or wherever are telling them, but figure out what they can give and how can they give that back to society. So I think that's where I'm ending. So if there's any questions or comments or tomatoes you want to throw or anything like that, I'm ready. Anything?
What did you learn at OpenTable that's influencing your current venture?
Network effect. So with the current venture, and I think Groupon's done an interesting job of coining this, or not coining this, making this phrase popular, and that's tipping. So how do you get, so if someone comes up to our site, and it's still in private beta, it'll be public in the next week or so, but if someone comes up to our site and joins it, they're going to be this person there by themselves. It's like having your own fax machine. You can't really fax, if you're the first person to have a fax machine, you can't really fax anyone else. So, so what we need to do is figure out how to get these local block level things to tip. And so that's where, if we looked at, with OpenTable, we used to compensate salespeople early on. The closer to the center of a market that a restaurant was, the more a higher commission we would give them, because we could see very quickly that if a diner searched and they got a single result set, Greek food, this area of town, Friday night at 7 o'clock for 4 people, and they got a single result set back, they would have this much of chance of converting. And then if they got 2, there would be this much, and 3 this much on average. And so you had this very nice S-curve. And so we could see that at about 12 or 14 restaurants, it sort of almost flattened off. It continues to slightly go up because people have favorites that they're trying to find and that kind of stuff. And it was all about network effect. And so, one of the things I didn't talk about is so after we raised this $36.4 million in October of 2000, we were at 174 employees and we laid off 110 people. We went down to 65 people. And a lot of people were like, well, why did you just raise $36 million if you're going to fire half your company or 2/3 of your company? And what we made a conscious decision to do was to go back and actually make sure San Francisco, Chicago, New York, and DC, the markets we happen to have the most traction in, we could get those to tip and become self-reinforcing. And so that's where that and so that's the first one. And 2 is the first bullet point I had earlier, and that's that, this sort of, it's a marathon, not a sprint. So how do we get a little bit better every day? And getting a notice on Daily Candy or even doing a Groupon, that's a single event that's going to happen. And if you don't figure out how to build into that process this repetitiveness, that it's not going to do you any good. So those are probably the 2 biggest lessons. That and people and process are extremely important. So. That it? Okay, thanks.